Hello everyone. Last night, before the US market opening, Bureau of Labor Statistics released the number of available job openings that was not filled in August month and which was rolled it out for the next month. Here, this economic macro metric is always controversial. Before 2010, this data was always in the range of 2 to 4 million opening. Between 2010 to 2020, from 2 million, it peaked to 7 million in 2019. Then after 2021, that 7 million increased to near 12 million opening in May 2022. From there, in the last 1 year, slowly dropped to less than 9 million opening in July month for the first time in the last 26 months. Now, in August month, as per yesterday's government released data, it increased again to over 9.6 million available openings against expectation of just 8.8 million. I mean, from the long-term economic perspective, more job openings is always good, but however, this poses the high risk of continuing higher inflation. Since if employer don't find a suitable person means, then they have to pay more, which again will lead to a vicious cycle of increased consumption and increase inflation. That's the reason lately this job opening macro and new jobs data is driving the US market. Now coming to last night data, this is the last thing at present market wants, especially now since Fed chairman signaled that he will be going to do one more rate hike by end of this year. Thus, this increases the probability of Fed watch tool from less than 16% last week to over 30%, signaling now Fed will increase the interest rate further 25 basis points in the upcoming FOMC meeting on November 1st. As a consequence of all these, 10-year bond yield again increased from 4.68% and moved above 4.8%. Finally, it settled at 4.79%. As we know, increasing bond yield is always against the stock market, especially against the tech stocks. Thus, last night, the whole US market collapsed. Dow Jones was down over 400 points, or in percentage terms, it's down by 1.29%. Then S&P 500 decreased 1.37%, whereas Nasdaq crashed 1.87%. In case of US VIX, during the market hours, it moved above 20, but finally in the end settled just below 20, 19.78. About oil, it marginally increased on the anticipation of extensive production cut decision in the upcoming OPEC Plus meeting, which is scheduled later today. At the time of this video, Brent crude oil was trading near 91 US dollars per barrel and WTI crude oil was around 89.5 US dollars per barrel. Then regarding Indian ADR, in line with the US market, both banks and IT stocks closed further negative than that in Indian market, indicating more sector weakness. About GIFT Nifty, at 3 AM Indian Standard Time, it ended the trading at 19,450 and at present the premium is only around 30 points, which is kind of indicating another 100 points gap down opening. So that's what happened in the global market. Now let's move to the India related info. First, quickly, I like to highlight some important info about the yesterday's Indian market. I mean, in the last video, we discussed in detail about Reliance that it will be negative due to the implementation of windfall tax, and also we discussed about the weakness in HDFC Bank and ICICI Bank due to the CLSA rating negative comments about the credit growth. In addition, yesterday, due to the mixed auto sales data in last September, all the auto stocks got under severe pressure as almost all from Mahindra, Tata Motors to Maruti all dropped over 2%. So those were the draggers. On positive side, public sector bank supported the market. I mean, again during weekend, CARE rating released the report. Here in their report, they used all those banking jargon. SCB means scheduled commercial bank. Basically, all big mainstream banks, both public and private ones. As a whole sector in the last June quarter, all mainstream banks posted near 69% year-on-year growth in profit. And if we divide that into private and public banks means, then for 3 consecutive quarters, PSU banks outperformed the private banks. And in the last quarter, PSU banks profit increased near 125% year-on-year basis, and they're expecting it to continue in the upcoming September quarter as well. So basically, investors are feeling PSU banks are cheaper than private banks. So I think that's applicable for short term, at least till the results announcement. Then second, yesterday evening, evening, US cargo market intelligence company Vortaxa released a report that India's diesel export to Europe in last September increased by 47% compared to August month and 57% compared to a year ago. So in numbers, at present, India is exporting near 3.5 lakhs of barrels refined diesel every day to Europe. This is really very positive for Reliance stock as they were the direct beneficiary Europe oil export. So let's hope at least Reliance will turn positive and trim some of the Nifty losses. And third, I know Infosys ADR closed negative, but still there are lots of AI related positive news, and also Kotak Securities replaced Infosys with ITC as their present all season recommended stock. So this will move some fund from ITC to Infosys, and there is a possibility that Infosys might support the market today. Here just a disclaimer, it may happen or may not be. I'm just trying to gather and inform the information so we can all be well informed. Finally, there is a price increase in iron ore and it is positive particularly for NMDC. As a summary for now, GIFT Nifty and Indian ADR are indicating negative and gap down opening of 100 points. However, there are some positive news around Reliance and Infosys. Let's see. One more thing, yesterday too for the 10th straight day, FII was still a net seller. The net sold for approximately 2035 crore rupees while DA net bought for near 1360 crore rupees. Then, as per stock open interest, India Bulls Housing Finance, PFC, India Cements, Dalmia Bharat and Siemens got an increase in open interest along with a negative close, indicates the short build-up. On the other hand, HCL Tech, Mahanagar Gas, Marico, Shriram Finance and Coforge got an increase in open interest with a positive price close, which means these stocks got the long build-up. About the things to look out, in the afternoon around 1:30 to 2 p.m, UK and Europe's PMI data and Europe's retail sales data is due. Then in the night, US PMI data and US factory orders are scheduled to release. These are some of the items we need to keep an eye out today. Coming to technical, yesterday Nifty opened on a flat note and traded with a negative bias throughout the day. It ended the day down approximate 110 points. Thus, on the daily chart, it forms the bearish candle with minor lower shadow. Basically, Nifty was unable to sustain at higher level and closed below 50-day exponential moving average, but still it managed to defend the 19,500 mark on a closing basis. So 19,480 to 19,500 will be a key level to watch, as breaking that on a closing basis can drag the Nifty towards 19,440 to 19,320, where 78.6% Fibonacci retracement level and 20-week moving average are placed. So key support zone. And on the higher side, the key hourly moving averages are in the zone 19,590 to 19,640. So that is now acting as a stiff resistance, and until the Nifty does not manage to close above this resistance zone, I expect the weakness to continue. Yesterday, as per technical analysis, I was anticipating a pullback. However, the attempts have been fragile and now we need to wait for a decisive price confirmation. In terms of levels, 19,500 to 19,440 is the crucial support zone, while 19,590 to 19,640 shall act as the immediate hurdle zone. Then, in terms of Bank Nifty, it also closed in red, down approximate 185 points. The pullback towards the key hourly moving averages were sold into, and hence until the Bank Nifty does not sustain above 44,700 to 44,800 zone, I expect the weakness to continue. On the downside, the Bank Nifty can slip towards 44,000 to 43,800. As per options data, the maximum call option open interest was at 19,700 strike, followed by 90,600 and 90,800 strikes, with maximum new call writing at 19,600 strike, then 90,500. Thus, Nifty may face around resistance at 19,600, while the maximum put option open interest was seen at 19,500 strike, followed followed by 90,400 strike with maximum new put writing at 90,500 strike, then 90,300 strike. This suggests that 19,500 is expected to be crucial for further downside in the market. Similarly, in Bank Nifty, it's same as yesterday. 44,000 is the support to look out for and 45,000 is the resistance to break. So that's all in this video. Hope you all got some useful information. Please consider subscribing to the channel and liking the video, so it will help me beat the YouTube algorithm and also motivate me to do more. Please don't make any investment based on this, as I'm not a SEBI registered advisor. I'm doing this for my and viewers' educational purpose only. Thanks for watching.